Hi, I'm making this video to talk about interest rates and more specifically about strategies for both buyers and sellers and how to deal with our current interest rate environment. The fact that, I've been doing real estate for almost 30 years and I've seen markets go up and I've seen them go down, I've seen them go sideways. And one of the things that you have to do is both for the buyers and sellers is they have to adjust to their market. They have to adjust to their market conditions. And what that means is that, right now we've got an interest rate environment that's much higher than it was a year ago. Well, a year's passed and we have to deal with the reality today. Next year, I believe it'll be different. I don't know how it'll be different, but I know it'll be different. But the reality right now is we have interest rates that are probably around 7 or 7.25% for a 30-year fixed mortgage for average credit. That's the ballpark we're at right now. So how do we deal with that? Because what that does is that makes it more expensive, obviously, for buyers, and it makes it more difficult for sellers to sell their home because the buyers have they've got a higher cost to buy. A higher cost to own the home. So, the fact of the matter is, when someone goes to buy, they've got two big out-of-pocket issues. They've got the down payment they've got to deal with, and they've got that monthly mortgage payment they've got to deal with. So this is really a video to talk about that second part, that monthly payment. So how can buyers manage that monthly payment as effectively as they can, and what can sellers do to help the buyer deal with that monthly payment? Well, the first thing that a buyer can do is he can get rid of that mortgage insurance. Typically you need to have a 20% down. Well, for first-time home buyers and sometimes for second-time home buyers, that's a tough thing to do. Well, there are programs now with mortgage lenders. I deal with several mortgage lenders. One of my favorite is Todd. And they have programs where you can buy away essentially that mortgage insurance. You can pay a one-time fee and that mortgage insurance is gone. And that is a huge benefit. And that probably has the biggest bang for the buck in terms of an out-of-pocket payment you have to make and the mortgage insurance is gone. And that is not a small number, that mortgage insurance. So that is something a buyer can do to help get down their monthly payment. The next thing you could do, and both buyers and sellers can do this, and that is to buy down the rate. If a seller comes into a transaction and they have to pay their 7% or whatever, well, if the seller is willing to work with them, and instead of getting a concession on doing a repair, or instead of doing a price concession, if they can use that money and allocate it towards buying a rate down, it will have a huge impact on the mortgage. There are programs right now where you can buy down the rate for the first year, for the second year, for the third year. You can even buy down the rate permanently. If you were to take a $20,000 concession, be it a price concession, repair concession, whatever, the point is, if the seller were to allocate that to the buyer, that could have a huge and material impact on their monthly mortgage cost. And the benefit is sizable. So if you compare that with just make a simple price reduction on the cost of the house, the impact's like that. But if you look at the cost of buying down their mortgage the first year, 2, 3 years, it's that big. If you believed that interest rates were going to change, and I'll guarantee you they're going to change, but if you believe they're going to be substantially lower in the next 3, 5, 6 years, well, you'd simply, use that strategy to buy down your mortgage rate for those first years and then refinance. That is a strategy you could use. You could also do a permanent buy down on the mortgage rate and use money from a price concession to do that. Conversely, the seller is way better off if they feel they have to make some kind of concession. They can many times make a much smaller concession and apply that to the buy down on the rate of the buyer's loan, where the buyer will still see a substantial benefit, and use that. So, the fact of the matter is, the seller may be able to make a smaller concession, pass on a significant benefit to the buyer, and the transaction gets done. So there's a strategy that the seller can use in order to make the deal go. So this works both ways. You know, the fact of the matter is, buyers can buy down the rate, but the seller can get on top of that and they can buy down the rate for the buyer's mortgage as well. So you can have a huge impact. So, point being, those are strategies that buyers and sellers can use in order to get transactions done. As I said, I've been doing real estate a long time. We have to adjust to our market. We have to adjust to the realities we have right now and what's on the ground. And right now, interest rates are higher than they have been. We want to get a transaction done, so let's find a way to deal with interest rates. So, and what that ultimately obviously impacts is the monthly payment. So, I give you ideas about how to get that monthly payment through, one, get rid of that mortgage insurance. Two, let's look at buy down strategies, both used by the buyer and the seller, in order to get the payment down so the transaction can get done. I hope this helps. I hope if you have any questions, you can give me a call. Look forward to hearing from you. Thanks.